they ask you to do a presentation. Some cities or townships want to hash this all out in a work session. And that works as well, but you should have board members with you in those meetings. It's important to have other people talking. You have a vested interest because you're an employee. We don't want anything that the board has to say discounted because somebody with a vested interest is talking. Now, these are the statutory basis for the budget work that you do. I would recommend that you go look these up. If you look here, the website is www.kslegislature.org. And it gets you to make sure when you do that, or if you Google Kansas Legislature and you come in, make sure you're on the current year. Depending on the bill that you look up or other things you do here, you can find on Google something from a prior year session that looks exactly like this, but it will say 2014-15 legislative session. Make sure you're on the current year so you get the most current view of the budget. The thing here is 1220, the key piece out of this, I'm going to read to you. So this is where the library becomes legally established. There is an election. You're now a legally established public library. And I will tell you in the reading of this, when it says governing body, it's talking about the city or township. It says, if the vote was in the affirmative, the governing body shall forthwith establish such library and is hereby authorized to and shall annually levy a tax for the maintenance of such library in such sum as the library board shall determine within the limitations fixed by law. Those limitations are a charter ordinance. If your library has a charter ordinance, if your municipality has put a charter ordinance in place, that has set a cap on the number of mills that you can levy in any one year. If your city says you have a charter ordinance and you don't know you have a charter ordinance, ask them for a copy. If you don't have a charter ordinance and they can't find one, I would entertain a discussion, find a way to either get one with a reasonable ceiling in place or just act like you don't have one. That's an opportunity for a discussion. We could go way down in the weeds here. Contact me if you have questions about that. Start always, when I say contact me, I really mean start with your local consultants, and if they think that there's a question they can't resolve, they'll push it up the tree to me, and there's no assurance I'll know the answer, but I'll hunt it down, I promise.
Laura, we do have a question. Is
Okay.
that charter ordinances for the library or for the city?
It is a city charter ordinance about the library. Cities and counties are the only two entities that can do what's called a charter ordinance or home rule. Townships cannot do this. And you have no limitation on the amount of tax dollars you can ask for other than reality and the fact that you'd like to do this more than one time. You have to come with a reasoned budget. That's your responsibility. Their responsibility is to levy. Some institutions, some cities, at varieties of times have been compelled for some reason to say, we're going to put a ceiling so they can't raise more money than this. And because basically it's a trust issue. Honestly, at whatever point in time that was, there was a trust issue, whether anyone acknowledged it or not. And they set a ceiling. If that happened 10, 15, 20, 30 years ago, it's time to revisit the ceiling, because the price of gas and the price of a loaf of bread and a gallon of milk are not what they were 30 years ago. If they want to keep a ceiling intact, and they're loath to get rid of it, the conversation needs to move to let's get one for where we are currently. And I can talk more about that with you. I don't really have time to go into that here. The next statute about the control and expenditure of, well, I got these out of order. 1225 is the powers and duties of the board. You should read this. They should read this. You need to have this as a discussion at a board meeting. I'm not really going to go through it in detail. It's something to look up. Control, whoops, hit the wrong thing. Control and expenditure of funds. This is the one that, if you look at the public library standards, that helps talk about the role of the officers of a board, the board president, secretary, treasurer. And this statute deals with the treasurer. The important thing here is that the statute says the treasurer of the municipality, meaning your city or your township or your county, shall pay over to the treasurer of the library board all funds collected for the maintenance of the library. You notice the words all funds. You have to watch that sometimes. They like to hold back. And the treasurer of the library board shall pay out the funds on the orders of the board signed by the secretary and chairperson thereof. Those are the two people who sign the checks. And then the treasurer mails them out. The treasurer gets them prepared. In all honesty, there's some combination of participation between the director and the treasurer about how much preparation happens by each, and how much mailing happens by each. It goes on to say, the treasurer shall keep an accurate record of all monies received and dispersed, and make a report thereof to the library board monthly or as often as the board requires. We're going to go back later on into some more detail on what those reports ought to tell the board. Terms of endearment. It's important to know where you sit in these terms. Fiscal year, for example, libraries have a January 1 to December 31 calendar year, fiscal year. It's nice. Townships have the same thing. Cities and counties can or cannot, kind of depends, but most of them do as well. However, the state has a July 1 to June 30 calendar year. So at this point in time in 2017, the state is finishing up fiscal year 2017, and on July 1st begins fiscal year 2018. You can get in real trouble or confusion, not trouble, but you can get confused if you talk to the state and they're talking fiscal year things. Know they're on a 6-month cycle ahead of you. The federal government goes October 1st to September 30th. That's why if you get an LSTA grant, you have to have a report in by September 30th or shortly thereafter about how the money was spent. That's why the state library wants it then.
Laura?
Yes.
Just to go backwards, because I just now noticed this. What if all your bills go through the city and are approved monthly by the board? Is that acceptable.
That's sufficient, yes. I know some of you are in that situation and the city is actually cutting the check. And in that case, they probably are keeping the money there, but that also means they should give you some really detailed reports of what they did with it. If they're keeping the money there and paying your bills for you, that's nice. But you should have a complete accounting and how much money you had in the fund to start, how much they spent, where you are at the end, and that report should be given to the board monthly as well. Hopefully, does that help? Okay, I can't see the chat, so I see Robin's head.
No, that was my question. Yes, it helps.
Okay, good. Fund accounting, we're going to talk more about, but it's all money and it's all bank accounts. But government entities do fund accounting depending on the kind of fund that they have. And I'm going to talk more about that on the next slide. Carryover is really, to be real simple about it, it's the amount of money you have in the bank account or multiple bank accounts that are available to be spent at the end of the year. So if you have a savings account and a checking account and you did a short-term CD during the year that maybe carries over into the next year, that's part of your general fund, you add those all together and that's your beginning carryover balance. We're going to talk more about that. Terms like revenue, income is the same thing. They have technical differences of definition, but for your purposes, it's the same thing. Expense and expenditure are the same thing. An encumbrance is an expense that you want to have happen in the current year. So your fiscal year 2017, but you're not going to pay for it till 2018. Most of you don't do encumbrances. If you're wanting to do one, start with your system consultants and work your way up, because that is something that you can do, and a lot of government entities do. So if you're going to want to encumber something, meaning you want to show the expense in the year you're in, but you're not going to have the bill to pay for until the next year, that's what you do. The middle two there, GAAP, generally accepted accounting principles. You do a GAAP waiver, and that's another thing I'm going to be putting up the examples on how to do. That's a yearly thing. Because Kansas is cash basis, we're going to request a waiver from generally accepted accounting practices. And they were developed by the Government Accounting Standards Board, which is, there's a typo there, GASB. You hear people say GASB. If your accountant or some accountant ever says, well, it's a GASB rule, don't roll your eyes too hard, but it's more than you really mostly need to know. Some accounting terms you'll hear: debits, credits, assets, liabilities. Google these terms. See what the definition is. I think they're fairly self-explanatory, but that's part of what you're going to be playing with in the money realm. More terms. More and more and more terms. You are mostly cash basis. You may be modified cash basis on some things, but mostly all libraries are cash basis. That means that you expense something. You put books into the collection when you write the check, not when you order the books. So the expense happens when the check is written. The income happens when it's in the bank. So if you have income that rides around in the treasurer's purse for 2 months, you don't have the income. It's not in the bank. This is very transactional, very clean transaction. It happens when you write the check. It happens when you bank the money. Think about it that way. A lot of businesses run modified or full accrual because they depreciate assets, which you don't have to do for the most part. The different types of funds. You all, as legally established public libraries, have a general fund. You may have a capital improvement fund. That fund has no levy. It requires a special resolution. It's one of those things that should be, this is a special library resolution only. This is something you should make a copy of, scan up into those important documents, put it in that important docs paper file, because this is where you set the legal basis for this fund. You can transfer money, no more than 10% of tax dollars, but any other money you get, fines, fees, dues, donations, whatever, you can put any other kind of money in this fund. It helps you if you have money that you want to protect, because it will move it out of general fund. So at the end of the year, it's not part of your carryover. It's in another fund. And the capital fund, you can only, if you're going to write checks on the capital improvement fund, it has to be for a capital purchase. It's not a repair. It is a full replacement. It's something that has a life. Software is usually not something like that. The computer, however, is. The employee benefit fund. You have a tax levy. It takes a special resolution that the board needs to develop and pass, and then have your city or township pass. If your city or township or county refuses to pass it, you won't have an employee benefits fund that has a separate levy. The key there we'll look at later is to see what your entity does. If they have one, I don't know that they have good grounds to refuse you having one, but that's something we can talk about. Endowments and trusts are other special kinds of funds that can have limitations and probably their own bank accounts because they have certain requirements. Types of budgets. I will say line item is the most common and the one we're going to focus on the most. A zero-based budget is the state budget form. They use zero-based budgeting. Program budgeting can be done in combination with line item budgeting. These two can be done on one document. If you want to know that, I can show you later. You should not have a lump sum budget. And by that I mean the city says you're going to get $25,000 and that's it. That's really not how the statute reads. And if that's the situation your library's in, you really can't go demand and pound on the counter. But what you need to do is open a dialogue for them to understand that you have a responsibility for making a request. And it should be levied onto the library. Okay, budget planning is complementary. If you don't have long-term goals, you're just in a panic all the time because you're firing off the cuff. If you don't have any short-term goals, you can't plan, and I hear some breath.
Yeah, Laura, sorry. Is the CD the endowment or trust? Is a CD the endowment or trust?
If it's general fund money that is not, you didn't get it to be in an endowment, you can have a short-term investment like a CD or a treasury bill that's actual current operational money for the general fund. Some libraries use that as a way of guaranteeing carryover. They'll put so much money they get from other sources just so they can tell their entity, we spent every dime of tax dollar we received. And we'll talk more about why next month. But, you know, you get your system grant or whatever, fines and fees, put them in a CD and earn some interest on them. Protect them from being spent because they're not in your checking account, and then they can be ending balance for you at the end of the year. We do that here at Nichols. And not enough. I don't put the entire amount I want for carryover, but I move money out of my budget and I put it in a CD so that I have money guaranteed at the end of the year to start the next year. It's a good idea. All right, here's more on cash basis. I give you the statutes. There again, part of the budgeting process is when you hear you have an expenditure limit on your state budget form that only relates to tax money. Every other kind of money you get during the year can be spent. You're only limited on tax money.
Laura, are we going to get into how much money we should have for carryover? That's in the next session, right?
I'm going to get to carryover here in just about
okay.
four slides.
Okay, so yes.
It's coming. We're rolling down the pike. All right. I'm setting you up. Can you tell I'm trying to give you a lot of setup here so you realize that this is a perpetual circle. In January through March, when you're down here, and if you can see my pointer waving around, here is where you're taking that evaluation and analysis from the prior year. You're beginning to work the current year. You're starting to look at the things you think you might need for the next year. So at a certain point in time, you're looking at 16, 17, and 18 right now. This is the phase you're in right now. Decisions you made about what didn't work in 16, what's not working in 17, what's working better than you expected, where you need to go in 2018 as part of your strategic plan. Then you come over here and you present it to your entity, the tax piece of it, and then they pass that and you get back here into operating and managing 2017, looking, always analyzing what's working, what's not, and then back down in here, you do the final approval of the next year's budget. So at the end of 2017, you're approving 2018, you're doing year-end evaluation of 2017, you're starting in 2018. It's your living budget all the time. And, you know, don't kid yourself, you do play with numbers all the time. Okay, this is an important thing. Bottom line in all this is something that a gentleman named Roy Bird told me years and years ago. Don't plan to budget, but budget to a plan. You should have some long range and short range planning in place. You should have some analysis. Your board has to have some really good, clear information so they can make those policy and leadership decisions, and that's part of this budget process. I have given you a timeline for how this works. I used to make people make a timeline. I would take this kind of document and I would sit down on my calendar for the rest of this year and for 2018, just some notes and reminders of what we need to be talking about at board meetings. That's primarily the purpose of knowing this. Cities are going to be voting on budgets in July or the end of June now if they need to go to election. That's what this tax lid law has done, is they forced the approval process further ahead. So you're going to be having your entity talk to you in March, April, May. Oh, we need your stuff. We need your stuff. This year it's very confusing because it's the first time they've done it. There'll be a more orderly path on this if they don't revoke the law going forward. Take this, read it, click the link, go out and check all this stuff out. So I know I have a district, at least one district library, and I put this in here for you. You are not affected by the tax lid. So what the important thing to know here is you're going to have the information from the county treasurer and the county clerk by June 15th. So you can start working your budget up. Know that the important thing here is you hold a public budget hearing 10 days after publication. So we'll talk next month about what that means about the notice of publication. Do not count the day it comes out in the newspaper, count 10 days after that, and then you can hold your budget hearing. And then after the budget hearing, you're supposed to give the approved budget to the county clerk by August 25th. As a district, you just do a little bit of a different path. The second half of the year is the same. You're looking at redoing a final budget. What's more likely than, what's changed during the year between the time when you revved your crystal ball in June and when you really get down to November or December. If you have a meeting in December, you can approve the final operating budget for 2018 then. If you don't have one, do that in November. Have it in place when the year starts for the next year. Okay, I go through again more things to make you think about what do we need, what do we want, how much should we have left at the end of the year so we can eat until the tax funds come back in, and maybe in March of the next year. This is a library budget that I like for several reasons. These people this is much more complicated than most of you have. They have taken this line here, the very first column is all the different funds in the budget all together. They have classified and mostly this was to develop their narrative for the city, but they have classified general other and general tax. And you can see that there was no tax money in the bank at the end of the year. They spent it all. They had $20,000 of general other money. Then over here, they have a legally established employee benefit fund, and they had $3,851 tax dollars in that fund at the end of the year. So if you come back to the left, that's showing the cash available to be spent starting January 1 is $23,851. They had their taxes. Now, they didn't give a complete breakout here. I'm going to show you a better one later. But you notice they have general fund taxes, which are blue. They have employee benefit fund taxes, which are yellow, because they're a different levy. This was just a way to visualize the money. Believe me, it's all green and it's all spendable. These are those other general fund sources of income. You might get money from a foundation. You've got some grants coming in. You get your state aid. You get your system grants. You have interest maybe on your savings account or money market or a general fund CD. Over here in this far right-hand column, that's a capital improvement fund. Different animal, but it's not part of your budgeting process. Other than you can show transferring money to that fund. Do you see down here in expenses, transfer from the general to the capital improvement fund? They showed they were going to put, it's $3,000 of expense for, they used $3,000 of their tax dollars. You see that line? Can you see, Robin, do I need to do a pointer, or can they see you can see my thing jerking around? Okay,
I can
great.
see your cursor when you move it. I can see
Okay.
And I'm getting nods from other people.
Okay, well, I don't mean to make you sick. But if you notice, transfer from general to capital improvement, it is an expense to the general fund. Now my cursor's going to leap up because up here, it's an income to the capital improvement fund. Probably clear as mud, but you might really study this, not focusing so much on the account names. The account name should be something that you understand that means the same thing to you as it does to your library board. You might have to review the chart of accounts and have a discussion about what you call something so that your board and you are looking and thinking of the same thing. This has to be a little bit of an English discussion. So down here on this balance, they started with $23,851. They ended the year with $17,191, and that is carryover. Okay? So determining carryover. You will do it for each fund that you have, whether it has a levy or not. On the general fund, always think of this as spending your tax dollars first. Even though you probably don't get the tax dollars before you start spending, in your mind, if you got $10,000 of tax money and you spent $10,000 you spent all your tax money. Carry over other funds. Restricted funds, you'll have a balance at the end of the year as carryover in those funds. They don't have a levy. The capital improvement fund does not have a levy. If in your budget you show that you want to transfer money to the capital improvement fund, but life happens and you really need that money for other things, you're not legally obligated to transfer it. Just so you know. Hopefully that kind of helps people understand carryover. Go back and look at that form and see how it came about and come back. There again, it's the money you have in the bank. Do I have another question? I had that thing drop down. I'm fine. Okay. I just must have gotten close to it when waving my, kind of like my hands. When I get the pointer going like my hands, this is the bad thing. Okay. So the library budget, your operating budget, your internal budget, your complete budget, I don't care what you call it. Just know that this is the whole enchilada. And you have to understand all of it. And it's not fair that you have to play with money to this detail, but that's part of being the library director and the leader of the library. And you work with the library board to set that tone. You've got to respond to the people in your community. Things I was going to point out in terms of expenditures. CanRan, that's what they still call even though CanRan is dead, it was their internet connection. And they actually still use that as an account name. Know that if you get E-rate, I would say as a best practice, I would get E-rate as a check back every year. I wouldn't get it taken off my bill. Because what happens is you budget for the lower amount in your internet, and if the E-rate funding goes away in the middle of a year, you're going to have a budgeting issue. So if you notice, they have the funding up here called CanEd. I would have E-rate money up here in the income. I would have the internet expense to be 100% of what it costs you. So you don't have to maybe have a problem if Washington, D.C. goes totally nuts, which you could. It's better to be prepared And if you don't need to spend that much money in that line, you can spend it for other things. Just remember, any line you overspend, you better be underspending another one by that amount of money. And always go back to what you anticipated for income, because if you don't, you're going to have problems. So here is a library I called the Reality Public Library, and their 2018 budget. And things to look at here are, we had a carryover amount with 3 zeros. That's interesting. Okay, let me write that down.
While you're doing that, we do
Yeah.
have a question about E-rate.
Sure.
Nicole says to ask it again, ask for it in a check form at the end of the year.
You just need to, because you're a Nichols library, the people with E-rate solutions we contract with. If you want to change to that format and it's been on your bills before, talk with Eddie or the individual that works with you. Because technically, that's the E-rate year runs July to June, just like the state year does. And so the E-rate solutions puts in the request for money back after June 30th. And how quickly your provider gets it back to you, it could be a month or two. But you should definitely have it before the end of the year. Does that help? Okay. The thing I wanted you to see here is that they call it E-rate. They had interest income, so they have something that's in their general fund, be it a money market account, a savings account, a checking account that earns interest, or a CD, a short-term CD that's part of the operating fund that earns interest. They have a system grant. A lot of you get system grants, and it's not just the ones from Northeast and Southeast, and you all get Central, Southwest, you all get funding from your system in one way or another. The thing I wanted you to focus on here are the taxes. You notice they only have a general fund because they only list breakouts of tax money in one place or one kind. This is a township library. You could have a city or a township, but when you get a check from your entity, it should have all these accounts as part of the breakout of the money. I don't want you to have one line that says income from the city. You get so much property tax or ad valorem. You get so much delinquent tax if there was any. You get so much motor vehicle, rec, 16, 20-ton truck. Watercraft is now a property tax, and commercial vehicle. Now, this township had watercraft from the third-class city as well, which I thought was sort of interesting. But you should have a breakout of all this money every time you get a check from your city or township or county. That when the county distributes the money, they give it with a breakout. It goes directly into the city's bank account, and they email a breakout of the kind of money it was. I don't care if you colorize these as yellow, pink, purple, and green. Just give every kind of tax money, account for it, and keep track of it. Because if you don't get as much of one, you'll never get more than you ask for ad valorem tax. But you never get 100% of it either. Usually it's somewhere between 95 to 99% of it, if you're lucky. Delinquent tax, those are the people that didn't pay you last year and the years prior. Vehicle taxes, all of these are based on the vehicles that are actually tagged. So it depends on how many people are buying newer vehicles if you get more or less than the estimate. The tax information from the treasurer is only estimate information. You're going to get actually what happens. Sometimes it's more, Sometimes it's less. Not very often. They're pretty good at predicting. Okay, salaries, you see they have their benefits. They split them into two categories: payroll taxes that the library pays, and other benefits like health insurance if you should have some, disability insurance, unemployment insurance, workers' comp. Those are all benefits. You will be paying them out of your general fund if you do not have an employee benefit levy. You still pay employee benefits whether you have a separate levy for it or not. Go back to that breakout.
Okay.
Yes.
Adam and Carolyn are saying that the city sends out a check but doesn't necessarily send out that report.
Ask for it.
Okay, so that's
if they don't, if they act like they can't give it to you, and Adam, you're a township. Valley Falls is a township library, right? So you're asking the township.
Can you hear me?
Yes.
Okay, great. Yeah, we one second, Steve. We so in asking our township board, I would just say, can I have a copy of
what the county sent you about the breakout of this money?
Okay.
The county gives it to them. If your entity is confused at all, call the county clerk and say, I just got a check from my city and they don't seem to understand. I'm asking for the breakout of the money. And the county clerk will just fax it to you.
Okay.
It's really something you need to have, because for budget purposes, if the money's not coming in like you estimated, you're going to have to make changes on the bottom end of this, the expense side. So there's a reason why you have to pay attention.
Okay.
Okay.
Thank you.
All right. Not a problem. This was an example of, we got 10 minutes left. I heard the ringy dingy. So I'm now going to talk really fast. This was a McLeod library from a long time ago, but they color coded some things, and this was part of a discussion from the city with their library board, deciding what they were going to do. And so this has got the budget on the left side and an explanation and discussion on the right. This is just kind of a make sure we're all on the same page kind of document, but I thought it was kind of interesting. If you notice the pink purple, they anticipated some grant income. And so down here, they have grant expense. If you're going to anticipate grant income, you should have a line in your expenses that says grant expense, and it should be the same amount of money. Otherwise, you're not keeping track of the grant properly, and you're not anticipating. You know, you could, if you show the income, it may think you have more money than you do to spend on just general operation. So, all right. Here is one of the forms that I think you should be giving to your board. This is an example. You can do whatever you want. I made it large enough you can't see the header, but this is called I would label this the 2017 or whatever year it is, itemized budget report. And what I'm giving it to my board on one piece of paper, because I don't know if you've noticed board members, but their eyes kind of glaze if a report goes into 5, 6, 7, 8, 10 pages. So this is a budget report. So this is that budget you developed here in this column. Then you're going to, some people don't even do the current month, but if you want to show how much money you got in the current month or spent in the current month, you put it here. This is the year-to-date income and expense. So you compare the year-to-date income and expense against what you budgeted, and you can now look at what percentage of budget did I use or receive and how much is left. And you can do the how much is left in dollars, balance remaining, see here. Percent of budget expended. This is an example. I'm not saying it's the only way things can be done, but there are a lot of pieces of information on a one-page report in this manner. And the one I left off is the treasurer's report. And that's a fund balance account. I'm going to be putting that up in the first part of Moodle for you to look at. Those are the kind of reports that I have in mind when I say give them something that's really, really clear and very easily understood. So we'll be talking mills, but very, very briefly. If you've noticed, everything we've talked about to this point is dollars. And I would prefer that all your discussion in-house starts with dollars, always dollars. You can cut dollars back if that mill levy is just way too high and you know it can't be supported. But dream the big dream and then make it fit in the constraints that you have, because otherwise you're never moving forward. You're staying in place and you're spinning deeper and deeper and deeper into a hole. Planning is dreaming big and then cutting it back to where you fit within your environment. You can't tax a stone. If properties are declining in your taxing municipality, you're going to be lucky to hold the levy and get the, try to get the same amount of dollars would take more mills out of people's pockets. So this is an explanation of what a mill is, because I want to set the stage for next time. I want to ask that for next time. This isn't really homework. This is something I want you to go ask your city and just know what the final assessed valuation of your property in the city or township you're in. Know what that final assessed valuation is. That happens in late October, early November of every prior year. So the final assessed valuation that's used to give you the taxes for 2018 will be done by November 1st of this year. Get your final assessed valuation, which you should have for 2017, which happened in November of 2016. And that's when your final levy for 2017 was established. And we'll talk about that teeter-totter and the fulcrum of if valuation goes up, the levy for the dollars, think dollars in the middle, stays the same. If valuation goes up, the levy rate goes down. If valuation, to get that dollar amount, if valuation goes down and you want the same dollars, the levy rate's going to have to go up. Know that property tax is ad valorem tax. Same thing.
We have, Nicole mentioned that one of her issues is that the mill rate can't go over 5.95, and we're there, which I submit is a fairly common issue.
Well, Nicole, what I would say to you is that is a charter ordinance. You're probably not, the discussion needs to maybe start happening right now, and you need to make your entity aware of the things you cannot do because of this X number of years old charter ordinance. I would go back to the year that charter ordinance was put into place, and I would find the cost of gas, the cost of bread, the cost of milk, the average salary, what the valuation, if you can, of your community was at that time, and then say, hey guys, I'm okay with you wanting to be responsible, but if you're going to put a ceiling on, that means you have to move it up every so often. Because if you're flattened on the ceiling, and you're going to have to start telling people, well, I'm under a 40-year-old spending restriction, and I cannot provide those services today. You're going to have those discussions. But like I said, it's awfully short this year. It isn't going to happen for 2018, but you should start now for 2019. Having that discussion, creating that awareness. They have two choices. They can repeal that charter ordinance, just do away with it, and take the restrictions off the library. And then you have to convince them you'll be responsible going forward. Or they have to have repeal it and have a new charter ordinance with a new ceiling. Hopefully that helps. If you have more questions, just get in touch with me. You're in my system, so I can say that. Okay, come back to this and look at, like I said, always watch where things are in relationship to each other. Income and expense. That's part of that perpetual monitoring you're doing all year long to ensure you have carryover. And go back to your original documents and see what carryover you anticipate. You could come in and add a peer carryover, then it would be total cash available. If you go back to the form I had, it gives you that. That's what you give your board every month anyway. So homework, please send me your 2017 budget with a beginning cash balance that you can get if your treasurer keeps that information. That I mean how much money you had in the bank in variety of accounts all added together that you could spend on the library in operation, not in a special fund.
And what she means by send me is upload in Moodle.
Very good. Very good. And I stress in there, I don't care what format you want to give it to me. You can give it to me in Word, Excel, Publisher, whatever you want to use. You could scan it on a piece from handwritten on a piece of paper, but you need a working budget for this year. I need to know that you have one in place, and you're going to be estimating, you're doing a cash flow analysis with that budget. And I want you to have a dollar amount you hope to have at the end of the year that you're planning on having to start 2018. That carryover number should be 1 to 2 months of operational cost. So if you spend on average $2,000 a month on bills and payroll, you need to have at least $4,000 in the bank at the end of the year so people can be paid, things can be ordered, life can go on until you get your first tax distribution. I have something I want to show you at the end of the slide. I put some funnies there just because I want you to laugh. So go online and read through these. An annual process, imagine that. I love this guy. It makes me laugh. Okay, so I'm done with this. Now, if I want to share something else, what did I just do? Okay, so if I share, say screen sharing it, so if I share now, I should be able to get this. So are you seeing that?
Yes.
Okay, this is when your city gets your money, and it's determined by statute. The first 3 payments, the January, March, and June are the largest of the year. They get much smaller going forward. You may get your money ahead of this, but your entity is required by law. The county gives them the money by these dates. And I would try to get my money at the next board meeting, whenever your township or your municipality, your city or your county were to meet. If these came in January 20th and your entity meets on the 1st and 3rd Mondays of the month, Try to get your money on the first Monday of the month. It really isn't a bill that the city has to approve because it's your money, not theirs. But some entities only want to give this out on the meeting where they approve all their bills. But it's important to know these dates so you can start saying, I understand you'll have my money by January 20th. If you'd let me know a date, I could pick it up. I'd be glad to come over. Or could we set up direct deposit and you let me know when I can expect it. So this is the statutory basis for when you get your money. And if you're not seeing money until March, they're investing your money in a short-term T-bill or something and taking all the interest. And there's really no reason why you shouldn't have the money rather than them. State grant and aid comes out lately. It's been coming out fairly reliably in February. If you're getting a check right now, get in touch with Megan at the state library and get set up for direct deposit so that money goes directly in your bank account. I know the dollar amount is going down, but it ties to the other things you can get from the systems. You have to complete that statistical report so you can get state aid, so you can get a system grant of some sort. System grants I didn't put on when they come out because it varies all over the map across the state, but you can write it in here. I'm going to put this piece of information up online. Notice the bottom box, deposit all funds on the same date they're received whenever possible. That means 99.999% of the time. The bank doesn't care who takes it. Have deposit slips at the library. If you're going to deposit it for the treasurer, make a photocopy of the check and a photocopy of the deposit slip, but get that money out of a drawer or out of, an envelope and into the bank. It doesn't do you any good in other places. I have put, for your information, this is outside of the scope, but the back side of this, I have information on payroll and payroll reports if you want to look it over and get in touch with me if you have any questions, or if your consultants have any questions about what I have put here, just let me know. Thanks for your time. I hope you've learned something. I hope it's useful. Like I said, if you need any more information, start with your consultants. And if you need to, always feel free to get in touch with me.